Konnichiwa. Ni hao. Jumbo. Hola. Hello. Let's go. Boom! That just happened. Oh, yeah. Whoa, come on, dude. Hey, good morning. What's the meaning of what? Life? Or is it jumbo? Somebody's like, what's jumbo? It's Swahili. Yeah. Anyways, hey, trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. Stay small, stay humble, focus on the long term. Do not risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. A lovely ECN offering its fabulous, beautiful, tall, good-looking, interesting, informed, successful clients, Forex, but also energies, metals, indices, binary options, and all things lovely. What's going on here, man? You guys still with me? Yeah. I don't know if you see it, but on my end, the software is freaking out. Sorry. I'm going to click this button. Did it go away? No, I think we're fine. Wow. Sorry, just the software's having a heart attack, that's all. But you're golden. We do these sessions, they're strategy sessions. Plan out our day. It's 2 hours before Wall Street opens. London lunch. Good time to come together as a team and realign our satellites. Do I think the drag queen will shock the market today? No. You know, it's one of these things, we would all like them to do more quantitative easing, but as I had mentioned before, the ECB will always test your patience beyond belief. So they will delay beyond the level of being flabbergasted, but they will delay until you give up total hope. When there's absolutely no hope, and that they've absolutely totally missed the boat to be with the window of opportunity to do anything meaningful, then they'll do it. As soon as you're sure that they won't do it. And that's not likely to be today. Wow, man. Do you see anything? I'm telling you, the software is just freaking out, man. Do you see anything? Yeah? I don't see anything. Really? Good. Hey, if you're good, I'm good. Nothing seems to be working on my end. But you know what? I don't care. All right, so let's see. Yeah, all right. I think you see what I see. All right, cool. Well, I'll just keep trading. How about that? Stay calm, trade on, huh? Yeah, you see the yen. You want to know a fun story? I longed this yesterday, and I put my stop. Hang on, let me zoom in. I longed this yesterday. I owned. Yeah, I put my stop here. Oh, damn you, yen, I'll get you yet. Yeah, so that's where I lost money. Yeah. Well, I was lower than the lowest low. So I don't know who's playing a funny game on Wayne, but that's too cruel for school. What you gonna do? You know what worked well for me yesterday was the pig dog. It's amazing when it moves how well it moves, right? So, like, I'll give you an example. Yesterday, I short the sucker, and then I go get like a cup of coffee, right? And I come back and I'm like, is that 60 pips? You're like, what? Holy smokes! So, anyways, the pig yesterday. Yeah, it was just these candles here, just like holy smokes. I think it was right in here where I was short. It was just like I don't know where it was. It must have. Well, it couldn't have been that one. So it was just in here somewhere. It was just wow. It was just fast, real nice. Like it that way. Um, and it was funny because I was really tempted in buying it after it dropped. So let me try to get this. So this is pound versus USD. And I almost, after shorting it here, I almost bought it. You know, it's funny how your brain works when it's raining pips. You're like, man, I can bet the farm, right? I'm the best trader in the world. Uh-huh. So anyways, I avoided that. But I was thinking, there must be orders in here, huh? Right in here. It was what I was thinking at that time. Man, look at nothing's working today, man. Why can't I move this? I'm grabbing the middle. Just amazing. It's one of those days. But anyways, I thought in here, just a little higher, right where we bounced, that there must be orders at least for taking profit, right? So the people up here like us that shorted this, look at the beautiful drop, lower low, lower high, 1, 2, 3, hammock, okay? And then down, right? And then down more than you deserve, sort of thing, like more pips than one would deserve. 382 predicts a 1618. This thing went down 2618. Nice move. But then I thought, wouldn't they take profit in here? And wouldn't there be orders here? And wouldn't this be the bottom? And I honestly thought about it. And then you know what prevented me from making that horrible mistake? You. And it's a funny thing. It's a very funny thing, and it's one of the major reasons I love doing these sessions with you guys every single day for almost 11 years. Because I asked myself at that point, when I wanted to buy it, I asked myself, WWWD, what would Wayne do? Yeah, good one, Demeter. Yeah, what would Wayne do? I ask myself these things. If I was coaching, would I coach you into that trade? Nope. I coached you in that trade. That looks pretty good now, doesn't it? So I'm like, that's, that's just the discipline that's required to say, you know what? Even if I made a lot of pips here, I'm not the greatest trader in the world. I can't predict these things. I'm not going to be super aggressive. I'm not going to swing both ways like a broken gate. I'm not going to make a bunch of pips on the way down and then turn around and buy it all back and make money on the way up. And it's just not how I roll. It's not the song I sing. So I'm like, nah. So thank you. You make me want to be a better trader. So here's the move on this level, and then okay, let's zoom in here. Let's do fractal geometry just a very quick, and then I want to move on to some other currencies. Whoa! All right, you see this? This is a 382 Fibonacci retracement, a 786 Fibonacci retracement into a 50% Fibonacci retracement, and this is the trade that I set you guys up in, 4 or 5 or 6 months ago. In fact, it must have been more like February to fib all of this. So back in February, we set up this down move, and we had the bearish set up on the daily. Then we had the bearish set up on the 4 hour, and then we had the bearish set up on the 1 hour. And now I'm thinking we're probably going to need another retracement at some point. But that's how it works. So Demeter asks a very intelligent question, as Demeter always seems to do. And someone also recently on the on YouTube comments asked a question. And by the way, thank you for those that leave a like, and thank you to those that leave comments. I appreciate it, and I do read them. Somebody asked a similar question. And it goes like this. Hey, Wayne, you talk about risk a lot. You talk about where to place your stop a lot. But you never seem to really talk about where to take profit. Oh, yeah, Kenny, I do. I absolutely do. I've read every comment ever left on YouTube. So, is that a fair question? Is anyone else scratching their brain on that one? Yeah, good. Now, why is it that I don't cover that? Individual choice. Yeah, it comes down to one simple thing. What was your strategy when you pulled the trigger? I don't know what your strategy was. Do you understand that point? Like, there's this strategy of selling the lower high in a falling market, and this would be a day trade. You sell here, it dropped here, you made a couple hundred pips, you're done. But was it this trade where you sold kind of the 618, 786, whatever this mess is, and your plan is to drop it to a lower low? Is your trade a position trade where you're going to be short down here for 1,000 pips? Like, I don't know what your strategy is. Now, the tactics. So remember, so my book I wrote 100 million years ago, right? It's not quite as old as the Bible, but it's called Strategic and Tactical Forex Trading. So you have strategy, and there are various strategies. Is it a scalp? Is it a spot trade that you might be in for a couple of hours? Is it a swing trade that you might be in for a whole London session, or maybe 2 or 3 days? Are you going to be in a month, for a year? I mean, that's going to affect your tactics. So, but tactically, I would enter every single trade the same way. So I don't care whether it's a swing trade, a position trade, or a scalp. I'm always going to enter the same, right? I'm going to sell at resistance. I'm going to buy at support. I'm going to try to line up multiple time frames. I'm going to try to line up the moving averages. I'm going to try to use some price action. The entry is always the same. Whether I'm going to be in it for 1 minute, well, obviously I'm going to be in a trade longer than 1 minute, but whether I'm in it for 1 minute or 1 week, it doesn't matter to me. I'm always going to pull the trigger in the same way. The tactics are going to be the same. Now, what dictates the exit? Right? The strategy. The tactics are going to be the same. A 5A cross short at resistance in a falling market. That's always going to be the same. I'm going to sell in a falling market. How long I hold onto it, that's a strategy question, and I don't know what your strategy is. So that's why I don't really cover it, but there's all kinds of ways. So if you're selling in a falling market, where do you exit? You could use Fibonacci to say, well, let's call this a 618. So a 618 predicts a 1382. That would work. If you use pivot points, how about a reversal pivot point? Whether it's a daily, a weekly, or a monthly reversal pivot point, they're all good. Clusters of reversal pivot points, they're all good. Psychological levels, they're all good. Right? Obviously, like price action support. If the 55 is in control and we come down to a double bottom, that would be a good place to take profit. Well, KC says, well, I suppose taking profit is never wrong. Well, yes and no. Okay? Yes and no. First of all, you can't go broke taking profit, right? But what was part of the conversation yesterday? The difference between trading and getting filthy, stinking rich. That's a pretty good topic. Right? That's a pretty good one. Yeah, you're never, ever, yeah. Never going to make it, 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 never make it, never make it. You'll never make it until you learn how to let your winners run. Scalping alone is probably the hardest trading strategy there is. It's fine, but you will be stuck in front of your charts the rest of your life. And you better be good every day if you're going to scalp. But I've analyzed well over 100 traders. I've analyzed easily millions of trades. Certainly a million trades, so more than a million trades. And of these, at least 100 traders that I've analyzed, they've been profitable. I've looked at over 100 traders' profitable trading history. No joke. I've stared at spreadsheets because I actually download the trade history until honestly I couldn't see anymore. I couldn't, even with glasses. I'm like, you put glasses on, and I'm like, I still can't see. My eyes are so shot from staring at spreadsheets of trade after trade after trade of successful, profitable traders. And the best traders there are, and by far, are the ones that let the winners run. So KC says, as a newbie, it's very difficult to let it run. Okay, which is true. You can do all kinds of things like set an OCO and never adjust your limit. Like, how about this? Just practice. Okay, Kenny? Practice. One way to practice letting the winners run is to set a limit order on all your trades for 300 pips. Okay? That's it. And never touch it. See how you do. So I have a strategy for improving my trading or the trading of others, and it uses scientific methodology. You test, You analyze the results of the test. You make a small adjustment based on the analysis you've done, and then you test again. Okay. And then on a different trade, right, you might take the same trade again and try a different limit, 100, and see which one works. So again, get a sample size, make 100 trades. Every time you pull the trigger twice. One with a 50 or with a 100 pip limit, and another one with 300 pips. And just let those trades sit. Both might have 50 pip stops. See how you do. And when you fail, why did it fail? Ask yourself those basic questions. What were the market conditions? Test, guys. Test it. Test. Test and reflect. Test. 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 You will not become a better trader sitting down every day trading. Okay? You could do what my dad does, go golfing 100 times a year and not become a better golfer by and large. You can have a lot of fun. But I said to him, he visited recently, I'm like, you know, you golf a lot and you watch golf on TV all the time. You even have subscriptions to golfing magazines. And after golfing 100 times a year and having all this data, you're still not any better of a golfer. You really should be a better golfer. You need to change something. And I said, it's not, it's not taking lessons or anything. It's you should change your attitude. Next time we go golfing or you go golfing, look at it as a practice round and practice very specific things, and you work on improving your handicap. Right? So what are you doing as a trader now? Do you log in to your trading account every day and just throw down some trades? Trade, 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 trade. You trade over 100 times a year. Very nice. Are you any better? Right? Trading a lot is not going to make you a better trader. So what does? Finding a very specific thing, like where do you place your take profit orders? And let's practice. Open up 3 TradersWay accounts, right? Put $1 million in each account. And when you decide to pull the trigger on all 3 accounts. Okay? One is, let's say, 50-50 OCO. The other one is 5100 OCO. And the third one is 5300 OCOs. Okay? They all have 50 pip stops. Not a problem. Okay? So what's the difference? The only difference is where you take profit. Now, I don't know what your strategy is, and maybe you don't, which is fair. I mean, don't get upset by it. Oh, Wayne. Look, if you don't know, you don't know. So are you a scalper, a spot trader, a swing trader? We don't know. Usually people drop into scalping because they're not very good on the other things, and so they realize if they only risk 10 pips, it takes longer to lose all their money. Okay, fine. But why don't we practice getting better? And that would be when you pull the trigger, go boom, boom, boom on all 3 accounts. The take profit's different on all 3. The stop is the same on all 3. And just let it do its thing. You understand? You made the decision tactically to pull the trigger. Let's figure out, based on scientific methodology, how good your trades are. You might be shocked to find that 70% of your trades that hit 50 pips also hit 100 pips. And you've been throwing them away. And you didn't even know it. Why? Because you're not gathering the data. And you're not analyzing the data. And you don't know the value of your trading. Where you used to be happy to take 25 pips, what you didn't know is 70% of the time you're throwing away 75 pips. So I would just suggest test. And this is some of the things, like when I mentor people, I don't say, so what's your problem? What's going on? Tell me about your trading. Because 99% of the time, those people don't know. Well, I'm not really sure. I'm all over the place. I'm a mess. So I start by gathering intelligence, and then I formulate a strategy. I wouldn't dare teach someone my ways, because my way is my way. And I know my ways. So that's the first thing. Always, guys, always gather the data. And that's how you figure out things like, where's your exit? So look at this trade here, guys, that we did together a few days ago. I mean, it was just a few days ago. Look, we hit the 2618 on the daily. Look at where the bottom is. Okay. Yeah, James. James says it's always good to trade it in a group like what we have here. It keeps you focused and honest and all that kind of stuff. Yup. We're with the team, James. All right, so that's that. Test and reflect, guys. Test and reflect. I can't tell you where your limit should be because I don't know why you pulled the trigger. Nor do I know how good your entry is. So just one other piece of food for thought. If your trade sucked, how would I know where your limit should be? If your trade is amazing, how should I know where your limit's going to be? So that's why I don't necessarily talk about it, because I don't know why you pulled the trigger. So only you can decide where the limit would be. And I'm challenging you to figure out two things. What your strategy is when you do pull the trigger, so you're going to have to think about it. But B, how good are your trades? And you probably don't know, so you're going to need to start tracking your data. Keeping trade journals and reviewing your statistics. Taking notes. Why did I take this trade? So if the vast majority of people are probably just, sell here, buy here, sell here, buy here, sell here, and you have no idea why you're doing it. Well, that should be discussed, right? You don't know why maybe you're buying and selling here, you're just doing it because you can. And yet I can tell you what I'm going to do next week. So there's a difference as well. So, you got to qualify your trades. Well, wait, or Ron, after taking the fundamentals course, to improve your analysis of your trading would be to gather your statistics. Yeah, Mike, you'd have to. Now, the interesting thing, Mike says, what do you do about news if you're doing such tests? Ask yourself, should you be pulling the trigger just before the news? Probably not. But you're saying, well, what if you're in the trade for 3 or 4 or 5 days, maybe a week? Yeah, but the vast majority of the time, the news is going to go in the direction of the prevailing trend, because that's why there's a trend, because the news is relatively predictable. So anyways, going back to Ron's thing, yeah, you need to, you need to analyze your trades, and start to qualify as these trades. When when you make a swing trade, Ron, what percentage of the time are you right? So I don't know. Maybe you're ready for a mentorship or something. That's where you have to really roll up your sleeves and figure some of these things out. But so, anyways, let's go to the pig dog. Lot of volatility in here right now. Boop, boop, boop. Let's get off the hourly. A little bit of trickiness, right? Lower low, big pullback, but that's the volatility. And that's the same, it's funny, that's the same that happened on the higher time frame. But maybe down in here you should be short. Then you get a lower low. Now what do? You do the same thing. And if it makes a lower low, you do the same thing. Okay. 15 minutes, you notice the moving averages. Even with this news, we had this blip as people got out of the market just before the news. It broke to 21, hit the 55, but it's still bearish, right? I've spent a lot of time talking about the strategy end. Is the market bullish or bearish? So it's still clearly bearish. Resets itself after the news comes, hits. People are back into the market. A bunch of people take profit here on the volatility. Comes back, hits the 21. 5A crosses down again, drops like a ton of bricks. Comes down to a psychological level. More traders take profit. Comes up, makes a 382 Fibonacci retracement back to the 21. Drop it like it's hot again. Should make another lower low. And when it makes a lower low, this support will become a resistance, and so it'll make a lower low. It'll retrace, and we'll sell it again. Okay? Make sense? If you're a bear on this, it should be easy. If it's not easy, it's because you haven't made the decision to be a bear. If you're a bull, that would be very difficult, right? I look at this and I say to myself, Marina's killing it. But you see the price action? Down to support, back to the 21, sell, down, wait for the news, down, right? Right? Retrace back to the 21, down, retrace to the 21, down. Should make a lower low, should retrace back to the 21, down. Okay. Easy peasy lemon squeezy. I want to look at yen yen. Have we done yen yen? Yeah, actually we did, right? That's where I bought it, and then I got knocked out at exactly my stop. Yeah. Yeah, we got an issue up here, it seems to me. The bottom of this range. Come on, MT4. There we go. Is really, I guess I should have put it under there. Okay, oscillator says if you want to buy it, you consider it. Moving averages are very wishy-washy. Moving averages are like lame-o market, right? Lame-o. Okay. Go to an hourly chart now. Hourly wants to fall Go to the 4-hour. Just stuck. Everything else is stuck. Notice on the daily that we're dealing with the 21. But here's the interesting thing. It's not working, is it? This should have dropped like a ton of bricks by now. Is it a wedge or something? It's consolidation. Okay. So we're waiting, and I've already discussed this, and YJ wrote about it in one of his posts on Forex.today. But there's a couple of meetings in October. It's the one at the end of October, which I predicted last month. Last month I predicted that next month they're going to add to quantitative easing. If that's true, then we'll have decision again. So it's kind of like we're waiting for the central bank. Okay. So I would, this technically is still bearish. So you see this zone up here, which I drew a long time ago? Or was it the one I just drew a minute ago? I can't remember. Anyways, this is clearly a zone of resistance. 21 is clearly below the 55. You know, if you had to, I don't know, if forced to say something, it's still bearish. Right, Ron? Right, Ron. It's still bearish. Funny thing is, I want to be a bull. That's the funny thing, huh? Funny how, like a clown? So, you gotta wait. That's it. I don't know. It's just we're there. We're waiting for something important. Technically, it's bearish. And I honestly thought we were going to make a much bigger drop. I thought I was going to be buying this at 15 or 16. Right after FOMC. Sorry. Right after FOMC, I thought we'd be on our way down for a while, but it never really happened, right? So I think we're just on the waiting train, right? The train's parked at the station. Okay. I shorted Aussie dollar yesterday. Suppose we can look at that. James, we need, yeah, I would have liked more, right? Yeah, more would be better. So here we are in the 15-minute chart. And yesterday we had a lower low. And look at that. Isn't that nice? Yeah, pal, I'll be happy to do Beast after this. But one of the things we talked about yesterday, pal, is having a marketable idea. Has anyone worked on that? Like, did you sit down and really ask yourself, what the hell am I doing? Could you explain your trading behavior in like one sentence? So I'll pick on Marina again, because Marina, from time to time, will share what she's doing. She'll say, oh my God, I'm making a fortune on the pound today, on the pound pairs. I hear this, like she says, on the pound pairs. I could say, what are you doing today? And she'll say, I'm selling all the pound crosses, right? Anything with a pound on it, I'm selling the British pound. That's a marketable idea. Okay? So, like, how am I going through the charts? I'm going through all the dollar pairs. Why am I going through all the dollar pairs, guys? What's my marketable idea? Okay? When I'm talking to, a bajillionaire in Dubai, and they say, well, what are you going to do with my money, Wayne? I say, well, why don't you ask me tomorrow and I'll tell you what I did today. I have no idea, but give me your money. I mean, it's just so funny to think that people do it. I don't know, wait, I don't know. I mean, it's just so funny, right? I want to buy US dollars. I mean, I can't understand how people would trade not knowing what they're going to do. And Mike's tried this out, and I don't know if it's worked for Mike. Maybe, I hope so, Mike, at least maybe on the discipline side or at least a focus side, or I don't know. But very often I'll tell people, flip a coin. I don't care if you're right or wrong when you create your bias size. And it's one of these things, like you can give 10 people the same facts, and the 10 people will come out with 10 different opinions. And that's really good. And as a wealthy investor, what you end up wanting to do is invest a little in all of them, depending on their risk and all that kind of stuff. You can make adjustments, 10% of your portfolio goes there, but only 1% goes there, but somehow it all works. But when your bias is wrong, at least you know when you're wrong. You understand? Having a bias, even when you're wrong, is incredibly important, because you could say, like this Aussie dollar, let's say my alpha, my decision, I've looked at all the facts, and I've decided I want to corner the market on the Aussie dollar. Because I wanted to do that on the Kiwi, right? Remember we talked about that? I'm like, I'm wondering if this is a good opportunity to corner the market on the Kiwi. But I know it's not the right time because the charts tell me so. I'm still waiting. Kind of feels like a waiting in the rain, right? It's a very uncomfortable wait. But at least I know I'm wrong. Because I try to line up my fundamentals or let's say my bias, whether it's technical analysis or fundamental analysis, a guess, dumb luck, whatever it is. I don't care what makes up your bias. But at least you know technically, because I think we can agree in many cases when it comes to technical analysis, if I wanted to corner the market on the Aussie dollar, this doesn't look like a good opportunity now. Right? Remember what I was saying to you guys yesterday? It was a thought process I was trying to get across. Let me get the same message across again. Should I buy it now or should I buy it later? Let's say I want to corner the market on the Aussie dollar. I love Australia all of a sudden, even though I've sold it for 3 years straight. I ask myself a basic question. If I want to buy it, right? I'll say, do I want to buy it now? Based on this, technically, is this a good opportunity to buy it? Am I at support in a rising market? No. Well, fantastic. Look how awesome this is. My bias is wrong. I don't have a trade. See, if you don't stand for something, you'll fall for anything. What's your bias, son? I have no idea. Well, good luck with that. Good time to sell. Oh, yeah. Holy smokes. Yeah. Okay. So it helps, even if you're wrong. So, what's your marketable idea? So I go through these pairs today like I'm a bull in the US dollar. Look at when the price action dictated we should be bullish. Look at this plan here. Is this a good plan, guys? We triple bottomed, made a higher high, made a higher low, made another higher high. And I said, you know what? It's going to make a higher low, higher high. Beautiful, if I don't say myself. Isn't that beautiful? When do you know that the trend has changed from bearish to bullish? Well, bottomed out, made a higher high, made a higher low, made a higher high, then I said buy the higher low. And keep doing that until it changes, or stick to your basic question on the long term. Right? Is this a good time to sell? Should I sell now or should I sell later? Right? Should I sell now? Should I sell later? Should I sell now? Should I sell later? Should I sell now? Right? So later, 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 later. What am I looking for in the center of the chart here if I'm a bear? What am I waiting for? Should I sell now? No. 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 Should I sell? So what am I waiting for? A lower low. Okay. So let's see. Here's the lower low. Let's see if it'll let me move it. I was having trouble earlier. It won't let me, and it still won't. Okay, good. All right, so let's use this. Okay, I'm looking at this low now. It makes a high, okay? Then what? It drops. Has it made a lower low yet? No. Rises up. My new low is there. Now I'm looking at this, okay? Makes another higher high. Then drops. Has it made a lower low? No. Then makes another higher high. Move my stop here. Then it drops. Did it make a lower low yet? Now I'm looking at this part. Nope. Then it makes another higher high. So I move it here. Uh-oh. There we go. Okay, so now I'm here. Makes another higher high. Then drops again. Did it make a lower low? No. Moves up, makes another high. Okay. There you go. Drops here. Did it make a lower low? No. All of a sudden, lower high. Well, but it made lower highs in here. No time to freak out, right? And then what? Lower low, lower high, lower low, lower high, lower low, lower. So somewhere in here is the change of trend. You understand? So you ask yourself, should I sell here or should I sell later? Sell later. Should I sell here? Should I sell later? Later. Should I sell here? Should I sell later? Well, inconclusive. Depends on how aggressive you are. Should I sell here or should I sell later? Sell later right there on the 382 Fibonacci retracement. Boom. So somewhere in here is a change if you're a bear. But you know not to sell, 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 you know not to sell. Now, of course, we talked about this after the FOMC because we're so smart, we should have sold the double top, right? I don't like to think that way, guys. Never, ever, 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 ever try to be the smartest trader in the room. You got to take your ego out, son. The smartest traders are usually broke. taking bets on double tops, right? Remember John Paulson, the guy that made $1 billion in a day? And I called him an idiot. And it's true. Gambling on someone else's money on a bet. Then he made $1 billion. Good for him, loser. And then what did he do the next day? Or the next big thing? Let's start a gold fund and let's lose even more money. Let's lose billions and billions and billions on one stupid idea. Well, that's how you get filthy, stinking rich. You make it, you gamble it, right? No. Let's start, instead of gambling, meaning like, I bet this is bearish even though it's bullish right now. That's not the way to do it, but to have a focus is good. And then entering your trades and reducing risk. Enter the trade, reduce your risk. Enter your trade, reduce the risk. That's the better way of doing it. Some traders live on counter trend trades. That's true. It's just harder work. Okay? It's just harder work. Counter trend, by definition, is twice the risk, half the reward. Sure, you could do that all day. You can get in the market where other people are getting out of the market. But think about it. Shouldn't you have, wow, I've been in the South a long time. Shouldn't you all be in the trend to begin with? You see what I mean? Like, you should be the one taking profit, not getting in. At some point, you shouldn't counter trend all the time. And then, I don't want to go there right now too, but that could also open up a whole different fabulous conversation. Live on the counter trades. You know what I mean? If we were at a bar and having a couple of drinks, we could talk for probably 2 hours on that subject alone. What is counter trend trading? Why does it work? The definition of counter trend trading could be different. And then the tactics. So you could say short selling is a counter trend trade if you're looking at stock. But, bursting someone's bubble and chasing someone's stop orders is a counter trend trade, but it might be logical, intelligent, but is it going to be the same in Forex and all that kind of stuff? So great comment. I'm just not going to go there today, but yeah, some people make a living on that, but most, right, let's talk about that. Most make money trading in the direction that the market's actually moving. All right. So anyways, so Aussie, guess what? Aussie's coming down. Yeah. Of course it's coming down. All right, so there's some dollar pairs anyways. We want to do some yen-yens, right? So we got a request for the Beast. How many people here trade the Widowmaker? The pound yen. Very tempting. Very tempting. It's called the Widowmaker for a reason. So anyways, check this out. I think you can see this, but I predicted it coming up and stopping. At that time, I had this, and I think it was because of the new month. So on September 1st, the first week of September, we talked about this going up, and I have a cluster here. You see, at that time it was a weekly reversal pivot, the conservative one. And then if you see here, it goes up a little higher to the monthly central pivot point. Neato, huh? And at that time, I'm not sure what we were talking about, but my wild and crazy prediction was up, down, up, up, right? Up, 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 down, down, up, 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 up. And look, it kind of, I mean, we can split some hairs on this and argue it, but it did go up, right, several times, depending on what fractal, But it went up, it came down, and then went up and hit the target, right? It came down, and I thought it might come down to this central pivot point, but I'm sorry, it came down to that central pivot point. So this is where your bias comes in. If you're a bear, it's interesting now, isn't it? And if it's a bull, if you're a bull, is this meaningful? I mean, it's meaningful either way, isn't it? See, if you're a bear, you're going to say, holy smokes, we hit resistance, obvious resistance, even a blind man can see, and we've made a lower low. That's important information, isn't it? Let's try to kind of, yeah, we'll do it like that. That's important information, isn't it? So what could you do as a bear? Sell it in here somewhere. Okay. So I'll use that weekly, just for fun. Okay, you see what I mean? If you're a bull, is this a good opportunity to buy? Ask yourself the basic question. By the way, Canadian retail sales missed. Really? Or wait, Canadian dollar's actually getting strong. Wait, did I miss something? Hang on. Month over month, 0.5. So why is it getting strong? How funny. We'll have to look at that later. So anyways, that could be a bearish trade plan. No, this is just a channel, but I could do an Andrews pitchfork. The only thing is, you know, you can draw it differently every time, but anyways, if you're a bull now, should I buy now or should I buy later? If you're a bear, should I sell now or should I sell later? Both are relevant questions. Okay. If you're a bull, I don't like it at all. Okay? But you know, it would be interesting in here, wouldn't it? That's why we use pivot points, right? I mean, if you don't use pivot points, then get rid of them. So what'll happen there? The bears will probably take profit. The bulls will probably buy. And then what is it going to do? It's going to go up. So actually, let me adjust this. Let's say it goes all the way. It still works out fib-wise. Or here, it still works fib-wise. Okay? So it comes down. Bears take profit. Bulls get in. Knocks the stops out of some of the bears that were too slow or too late. Rallies up into here to the weekly central pivot point in which the bulls now take profit. And the bears, especially the guys that missed the first wave, sell again here on the Fibonacci retracement price action rule reversal. And then it comes back down and makes a new lower low next week. You see what I'm saying? So I can see what the bulls and the bears are going to do here. Make sure you know which one you are. Let's do some quick commodities. Just a quick update. S&P 500 flat. NASDAQ down 1.5%. What? NASDAQ's down 1.5 and S&P's flat. Someone's getting creamed there on the NASI, huh? 10-year T-note, 2.14. It was 2.18, I think, yesterday, and before the FOMC decision, it was 2.2. So interest rates are falling, which means bond prices are rising, which means somebody's buying them. Okay. Oil, $46.60, up 0.5%. But I already predicted that 2 weeks ago. So you should be long down in here anyways. Okay. How nice. Okay. Yeah, pal. Yeah, target setting stuff. Yeah, I'm happy to help. I just hope you understand that that's a strategic answer, and I don't know what the strategy is. So, it's an individual thing, and right. What your strategy is, but also your capabilities. How good are you as a trader? Another way of saying that is how well are your entries? What are your averages? What are your average trades worth? How long are you in the trades? All these things are going to affect it. So it's like, pal, you can pay me $5,000, and at the end of the month, we'll have a hell of a lot better idea. But there's no other really way of doing it. You have to gather the intelligence and then formulate the proper strategy for your trades, right? And you might find out if you gather the data properly, you think you're a scalper, but you might be a hell of a swing trader. Okay? So, figure it out. Okay, anyways, oil up about 0.75%. And we're long at, the line is 44, but anyways. It's just slowly working its way up. But my issue with oil, and I've said it before, and I'll have to say it again. It's worth $50, give or take $10. If it comes down to 40, people will buy it. If it goes up to 60, more oil will be produced, and it'll come right down. I think we're going to be here, roughly speaking, we're going to be here on oil for almost forever. So, as an asset class, to me, I've lost a lot of interest in trading it. As a fundamental indicator, maybe, of global macroeconomics, that could be interesting, but we have low demand and high supply. So probably not going to go up. Okay. Here we are on gold. We're wedging it. Pal, you're so funny. I'd get a membership, but these free classes are so good. Wow. Good thing I don't want to show up lame. So anyways, I take that as a compliment, I guess. Huh? All right, so yeah, here we are. We're kind of at some sort of resistance, but similar. You buy gold if you think capitalism is over, but it's not what the world's interested in right now. So if it comes down, people will buy it. If it goes up, people will sell it. And so we're just caught in this range. Okay, but let's talk about gold for a second. It's the anti-dollar. And I do believe the dollar is going to gain strength over the course of the next 12 months. My 12-month outlook for the US dollar is bullish for the US dollar, which means just on paper, if the dollar gains strength, gold prices should fall because $1 will buy more gold, right? But that's in a logical, intelligent world. I believe the market is not logical, intelligent. So it's going to fall, and then because it's falling, people are going to buy it. So once again, no reason for it to go up, no reason for it to go down. And I look at it like the market's irrational. If it wants to go up, it'll go up, but I don't think it wants to go up. I think it just wants to stay the same. So if you're a day trader or something on these types of commodities, then maybe that changes how you play it. Okay. But I don't generally day trade the commodities anymore. Taxation in the United States just makes it too complicated. I like money. I like buying money. I like selling money. Money, money, money. And I don't know. How about one more? What would you like me to cover, boss? Okay, so Euro Yen. Let's talk this out loud. What is my fundamental bias on the Japanese yen? Bullish or bearish? Let's just talk about it. Talk to me, Goose. Okay. I'm bearish. Okay. What is my fundamental bias for the euro? Am I bullish on the euro or bearish on the euro? So therefore, I don't want to talk about euro yen. I just honestly have nothing to say. I'm a bear on both. I don't even want to look at it. I don't. What if I look at it and convince myself to do something I don't want to do? Have you ever done that? I mean, if you shop while you're hungry, you're going to buy anything. I don't even want to look. Maybe that's my weakness, but maybe by not looking, that's my strength. I don't know. But I don't want to look. So I'm not trying to be mean. But, it's technical analysis, guys. We might disagree fundamentally, cool. You know how to do technical analysis. You don't need me to tell you what to do on the Euro USD. Or Euro Yen, for example. But USD Swiss franc. Yeah, I guess, Ron, you're right. I am giving you an answer, right? It might not be the answer that you want. But, that's just, I don't know. It's, put it this way. I'm the battle-scarred field officer, right? I'm the non-com officer, sergeant. And I'm the tough SOB that just can't get killed for some reason. I'm ugly and I'm scarred and I'm beat up and I'm just a tough son of a gun. And for some reason I can't be killed. So I'm just trying to share with you my survival tactics. This is how I live to be so old in the middle of a battlefield, right? Because I don't even want to look at the euro yet. Okay, so maybe it is the answer. I looked at it fundamentally. On both of these things, I'm bearish. I done. Okay. Demeter says he's afraid to trade Swissy because of potential government intervention. I'm not afraid of it that way. I'm just still mad. And it's, again, probably a weakness of mine. I'm still mad at Switzerland. I am still Very mad at Switzerland. And I have an opportunity cost, right? If I ignore the Swiss franc, I'm not really giving up a lot of opportunities because I still got the dollar and I still got the yen. Yeah, I love the people of Switzerland, I suppose. I need to go to the area. Yeah, one of my friends is moving to the south of France, not far from Switzerland. I'm like, really? He's made enough money where at 40 he's going to move to the south of France and spend the rest of his life there. Like, really? You suck. Wow, that's awesome. And my other friend's buying a castle in Belgium. He's like, yeah, it's awesome. You gotta come to Belgium, stay in my castle. Yep. So I'm really overdue for a trip to Europe. That's funny. But Zurich, I love Zurich, and I've already told my children I will take them to the best chocolate, the best place in the world that makes the best hot chocolate. And it's in Zurich, so I'll definitely be there. Yeah, got to go for the hot chocolate, at least. So I'm sorry, did we, so I don't want to talk about Swiss franc. Let's talk about the S&P 500 then. All right, so what's going on? Well, fundamentally, I believe people want it to go up at some point. And it is a commodity where there's, which is different than a currency. A currency can go up forever, a currency can go down forever, and that's that. That's a fact, Jack. A commodity, and I almost look at it as a physical commodity. Somewhere there's a share of IBM. There's only so many shares. And if IBM is making money, I mean, listen to me, making money, that means profit, then somebody's going to want to share in those profits today, but also future profits, right? That's what it is. You're buying into a piece of future profits, future anticipated profits. So you buy ownership in IBM. IBM is not going to go to zero. Then you say, well, Wayne, but okay. Philosophically, IBM can go to zero. It's been around forever. It could go to zero. Companies that have been around forever can go to zero. But what's the likelihood that 500 different companies on the S&P 500 go to zero? Yeah, Kodak's a good one. How about Xerox? Kodak and Xerox basically invented computers, personal computers. Okay? So anyways, probably not going to go to zero. Do you understand where I'm going here? At some point, it's going to have a price where you're going to want to buy it. Okay? At some point, you're going to want to buy it. The last time I saw the S&P 500 at a really good buy, there was two of them, right? One bounced at a 50% retracement. The second bounce was at a 3A2 retracement. That's when the Dow was at 8,000. So all I'm saying is this is going to go up. I guarantee it. It's going to go up today or tomorrow or next week, next month, next year, but it's going to go up. There's a headwind, and it's up. So it comes down to the simple question that I do apply to a lot of my trades. Do I want to buy it now, or do I want to buy it later? Yeah, Anthony and Carmen are talking about companies that failed. How about companies that have grown into something completely new? Why was What was Lamborghini's first product? Yeah, combines, tractors. Yeah. I'd like, on my list of to-dos, I'd like to be one of those eccentric billionaires that drives around in his 1933 Lamborghini tractor. Around my property. I'll be in my backyard digging up trees and stuff with my Lamborghini. I've always wanted a Lamborghini. So anyway, so it's grown into cars and stuff because they ended up just using surplus war material from World War II to start slapping together cars because there were no cars left. So, yeah, I've seen one of the very first Porsches in the world, and it's hand hammered. It was basically a Coke machine, or Coke, not a Coke machine, a can of Coke with I don't know, a two-stroke engine. I don't know. It was small. So, anyways, guys, I want to buy it. Probably not today. That comes down to personal choice. But if we're going to use price action, we've made a lower low. Well, that's not quite a lower low. Okay. But now, after the lower high, it's made a lower low. So I'm not in the business of buying lower lows. That's just not what I do. Okay. So I'm going to sit around now, and I'm going to wait for a higher high. And then I'm going to wait for a higher low. And then I'm going to buy, boom. Okay. How many people are thinking inverse head and shoulders? Come on now. Come on. Why is it not an inverse head and shoulders? No, it's not possible. It's a reversal pattern. Yes, carry that thought process. It's not an inverse crown either. No trend. Thank you. It can't be reversing. This would be a reversal of a downtrend here. But you would have to have it on a much higher time frame. You'd have to have this be but inverse head and shoulders. But right now, it's not really. Okay. Price action would have been down, up, down, up, down, right, up, down. But this is just consolidation, basically. Okay. So we had a buy in here. You can see I have you long here. And it went from a 786 to a 2618. So I already got you long. You're welcome. So I would just probably have my stop at break even and just pray. It's the stock market. That's my strategy. Okay. So you have to have something to reverse if it's a reversal pattern. It's not a reversal pattern. It looks like an inverse head and shoulders or an inverse crown, which is the same thing. But whatever. I'm simply going to look for a higher high, and then I'm going to buy the higher low. Or wait for the extreme higher high, like this. And then, right? And then buy this. Sorry, wrong one. Hang on. Oh, everything's falling apart. Hang on, let me try it again. This should be like this, okay? Now this should be like this. And it's not quite to the proper proportions and stuff, but I think I'd like to be long here. Okay? Okay, not here. Maybe here, definitely here. Okay? ECB can alter size and duration and composition of QE buys at any time. Just not now. All right? See, remember, the ECB will only move when it's so unbelievably, ridiculously late that you actually gave up on them. When you think there's no hope for the ECB, then they'll tell you, and listen to this, when you've given up all hope that the ECB is actually going to do what they should have done a long time ago, when there's absolutely no hope, then they'll come out and they will tell you they're thinking about doing something soon. So announce increase in quantitative easing today, that's what you would expect. So here's my guess, and I'll end it with this. Here's my guess. You would expect, based on what Yellen said today or last week, that the ECB would come out and increase their rate of quantitative easing. That's what one would expect, because that's logical. So they'll do that in March. Do you hear me? It's almost October. My guess is the Europeans will increase the rate of quantitative easing in March, maybe June. You see what I mean by like so unbelievably slow that you'll give up all hope that they're going to do it. So they'll probably tell you in March that they're going to do what they should be doing here in September, but they probably won't do it until June of next year, which is almost a year. Yeah, that slow. But I love you, babe. Thank you for being on my team. Like I said, when I'm trading by myself, I always ask myself, what would Wayne do? Coach Wayne. And, it keeps me, being the trader I want to be, which is cool, man. So I really appreciate it. And I appreciate the amount of effort that you're putting into your trading. But I hope you get the message. I'm always sharing some sort of message with you. And you're not going to trade your way into being a better trader. Okay? You need to break things down into small bite-sized pieces. We need to focus on very simple things. What is your bias? How do you trade in the direction of your bias? If you're trading in that direction, where's support and resistance? How do you pull the trigger at support and resistance in the direction of your bias? What kind of stops and risk management should you use? What kind of risk management is best for you based on your trading behavior, such as, over the last 100 trades you've made? Well, that means you're going to have to do things like keep a trade journal and review the last 100 trades you made, which means if you're going to analyze them, you better make some good trades. You understand? So what are good trades? Trading in the direction of your fundamental bias by trading technically at support and resistance in the direction of your fundamental bias, keeping a trade journal, and then once again reviewing them. If you're reviewing your trades, then you can also identify your strengths and weaknesses. And then once your strengths and weaknesses are identified, then we have something that we can work on. Right? So you can pay me $5,000. If I have the time, I could sit down and do it with you. If you don't have the $5,000, then you should sit down with yourself. Either way, to move to the next level of breaking beyond break even, somebody is going to need to do it. So I know if Daniel, for example, If he uses a 50-50 OCO, 70% of the time, he will make a profit, as long as he doesn't move his stop. 70%. I know that because we analyzed the stats. And then we found an interesting thing. If you move the stop to 60 pips, or I mean the limit to 60 pips, he still hits the 70%. Huh, interesting. You move it to 75, the numbers drop very quickly. So we know on his swing trades, he can pick up 50 or 60 pips with his eyes closed. Awesome. But to know that, you're going to need to have a sample size. You're going to need to gather those statistics. You're going to need to analyze them to find out what the patterns are and what trends are. Then you need to make some small changes, gather another sample size of data, and then see what the differences are, and then make a further adjustment to capitalize on the new knowledge, and then see how, statistically, the change impact. See how easy it is? That's why Daniel's an excellent trader, because he knows his stats. He knows because he's gathered the intelligence, right? He's measured, reflected, and adjusted, and improved. And you only have to do that forever. Easy peasy lemon squeezy, right? Yeah, Marcia, come on, Marcia. When did you get on oil, Marcia? I didn't know you traded oil so much. Well, how about this? I'll make one more comment. I know I'm going on here. So I'm asking you to keep your stats so you can identify your strengths and weaknesses and make improvements. You need to do this for yourself, right? If you asked someone to give you $1 million to trade with, what do you think they're going to ask you for to help them make a logical, intelligent decision? What would they ask for? A trading record so that they can analyze the amount of risk you take for the amount of profit that you can provide, so that they know what they're getting into, but also how you fit within their existing portfolio. So, Felipe, 6 months wouldn't be as good as 6 years. What a track record's supposed to tell you guys, look at it from an investor's point of view. Okay? Let's use John Paulson again. Made $1 billion on one bet. On one day, personally made $1 billion because he bet the real estate market was going to collapse. Okay, good. Then the market changed. Then what? You lost it all, just betting on something else. What a track record is supposed to tell you, besides just risk reward, is over the course of time, as market conditions changed, how did the trader adjust? So if you come to me and you're like, Wayne, I made, 200% last year. That was my percentage. I made 200% return on investment. It doesn't tell me anything. I couldn't care less. Who cares? John Paulson made a lot more than that when he gambled everything on gold, or I mean on the real estate market. He was right. Good. Made 1 trillion %. Still an idiot. So what it's supposed to tell me is, all right, you did well last year. in certain market conditions. But next year, and this is why we say this, past performance does not predict future results, right? Next year is going to be radically different, right? 2016 is going to be radically different than 2014. And as a potential investor, I would like to know how well you adjusted to changing market conditions. If you can give me 3 years, that'll be a lot better than 3 months. Do you understand? It's assumed you're going to be good, but I'm not interested in good. I'm interested in risk. Of course you're going to make money. It's your damn job. But what do you do to make your money? And what do you do when things change? Your one idea? What do I do when the dollar just doesn't get strong? Right? Imagine this. 1 year, I make a phenomenal amount of money for my investors buying the US dollar. And then the Fed changes its policy. The dollar weakens, but I just keep buying. You see, I didn't adjust. What would my trading record say? He got it right 1 year, and he got it wrong the next. So I don't care if you made 200% last year if you lose 100% this year. So I'd like to say, all right, when the markets change 2 or 3 or 4 times, what did you do to make your money? How long does it take you to realize things have changed? How long does it take you to adjust? And did you make a lot of money because you gambled everything on one idea? Or did you manage your risk appropriately, and when the market conditions changed, did you change with the changing market conditions? If you did, I may decide to invest money. I don't care if you made 1,000% last year. It doesn't mean anything this year or next year. It just means you got it right last year. You probably took a lot of risk to make that kind of reward. And so you say to me, Wayne, I made 1,000% last year. And I'll say, like I said about John Paulson, you made 1,000% last year? Holy smokes, that's a lot of money. But you're an idiot. Because the reward is a function of risk. And you just took way too much risk. You made a ton of money this year. And chances are you're going to blow up your trading account next year. And it's not going to be with my money. So peace on earth. May the pips be with you. May your profits be above average. Thanks for being on my team. Thanks for being a client of TradersWay.